So on the 28th of February 2026, EPF declared a 6.15 dividend for both the conventional as well as the Shariah savings plan. Want to find out how they did it and whether this is something sustainable going forward. In this video, I'm going to cover the historical performance of EPF, the allocation strategy that they have done, and why and what they did well in 2025. Hello everyone and welcome back to the channel. My name is John, former engineer turned full-time investor, currently wealth planning director at Phillip Capital, as well as the author of the book Malaysian Multi-Baggers. The book signing ceremony will be on the 28th of March, Saturday, 2 p.m. at MPHTRX. Come join in the fun, and if you want to get your book signed, I look forward to seeing you there. So it's that time of the year that every EPF contributor has been waiting for, the point where EPF declares the dividend for last year and you get a payout into your account. Yes, that was 28th of February 2026, where EPF declared equal amounts of dividend rates for both the Shariah and as well as the conventional. Now, how did they do it? And why is even though the yield looks lower, but actually the payout was actually higher. So in 2024, the yield was much higher than what it is in 2025, which was 6.5. But the total payout was actually much higher than 2024. They actually paid out 79.6 billion in total as the pot for the dividend versus 73.2 billion in 2024. This total, there's a few reasons. One of it is because the total asset under management, which the pool of money, right, grew by roughly about 12.8% to 1.41 trillion. Yes, that's the size of EPF today. Asset under management, 1.41 trillion, meaning it's a smaller percentage of a much larger pie, but it's a bigger slice for more members. So how did EPF execute and deliver this? What was the ROI on their asset allocation, and which asset class was the largest? It was actually equities that delivered these results, and they generated roughly 51 billion worth of income in ringgit, obviously, which is roughly 64% of the total income derived from the investments. It had an ROI of 7.9%, even though private equity was higher in terms of ROI, which was 10.5%, but the allocation for private equity was lower. And for those of you who really look back into history and understand how EPF used to be and their asset allocation, it was primarily fixed income or very much a debt-driven kind of asset allocation. Because in the 1980s, I think the equities allocation only made up roughly about 10%, and fixed income was 90%. Then in early 2023, it evolved to roughly 42% equity and 46% fixed income. 2024, 43.5 or roughly 44 on equities, 46% on fixed income. But 2025 was the first time in history where the equities allocation was actually bigger than that of fixed income, which equities stood at 46.1, and then fixed income was 44.7. And that was a significant milestone that I think Malaysians should understand how as EPF grows in size and in scale, for them to generate returns or alpha on the portfolio of this size, I think it's inevitable that they have to look for the equities market to deliver that kind of returns. And kudos to the EPF team. I think they are among the best pension funds or provident fund around the world. Very happy contributor, to be honest with you. And I just wanted to create awareness of how well, and it's not easy to manage the size of this kind of fund. The bigger you are, right? Ironically, a lot of people think that the bigger you are, it's easy to deploy money. Actually, the bigger you have the fund, it's actually harder to deploy and harder to generate that kind of return. So yes, equity remains the primary asset allocator for 2025. Did the strengthening of the ringgit against the US dollar, the greenback, actually contributed to the returns? Yes, it did, roughly 10.2% because of the ringgit appreciation. And while this is great for the economy, this is actually creating a negative forex translation because it reduces the ringgit value of the overseas profits. But by and large, I see this as a short-term or medium-term kind of setback. But going forward, I think the strategy that EPF will try to find is that will the US dollar actually weaken further, and is there value in the equity markets outside of Malaysia? Because while a huge chunk of the equity portion is still in Malaysia, 60%, right? I think where weak markets are, ripe for, bottom fishing for equity investors, and I think EPF is definitely on the ball in trying to find, values. You can buy assets, equity assets, 50 cents on the dollar, 60 cents on the dollar. I think that will help generate alpha going forward in 2026 and 2027. But obviously, as the asset grows bigger and bigger, you're talking about 1.4 trillion, right? A 10% change in forex direction is already going to negatively impact the returns. So I don't envy EPF's job trying to allocate here and there. But what we're seeing is that by diversifying into private equity, something interesting is getting bigger and bigger. Because it used to be a very, very small allocation focus for EPF, but now you're seeing it grow in importance and them trying to deliver alpha. So now going forward, whether the efficiency between domestic equity and foreign equity, global investments actually made up only about 38% of the equity asset, and but here's the but, it actually produced 50% of the total income versus domestic being 62% of the asset allocation but produce only 49 or roughly 50%. So you can see, right, bigger allocation domestic, returns is smaller allocation international, but returns is higher. So earlier in my point about forex translation, that's gonna impact, and the bigger the AUM size, and now at 1.4 trillion, is going to have an even bigger impact. So going forward, I mean, this is something that only EPF insiders will be able to answer. How are they going to allocate? How are they going to seek for alpha? If, let's just say, suddenly the ringgit weakens against the US dollar, is that strategy going to maintain, or is it going to change? I'm really curious to see. Ironically, just some back of the envelope calculation, if the ringgit did not strengthen that much and its forex translation to the US dollar remained flat, it would have declared even a higher dividend because the income would have been more. And but that's the global markets for you. It's not just about asset returns, but actually forex translation, whether it's positive or negative. That again, I can't emphasize this point enough. The bigger the size of your fund are, just a 1-2% difference in forex will really make a direction or up and down of your portfolio. So I'd like to touch a little bit more about their private equity investments, because that really delivered an alpha of 10.5% now. Obviously, we have to wait until the detailed annual report of EPF comes out, probably somewhere in June, July. Usually somewhere is May, June, July, that period. But based on their latest press briefings, they did give certain disclosures in which it represented roughly about 8% of the portfolio weightage, delivered 10.5% ROI, right? And it significantly outperformed the equities asset class. And they did, kudos to them, separated the disclosure of the equities return versus the private equity return. So what did they invest in? In this private equity, what did they invest in? Actually, there were 4 key themes. One of it was the silver economy, which is really aged care and healthcare, because they believe that as aging countries, aging population around the world, in many countries, China, the US, even including Malaysia, there is a profound need for sustainable healthcare and aged care facilities. So it actually scaled up investments in ambulatory care centers, home-based services, affordable health tech, and it has a mandate to actually build a private wing in public hospitals and daycare centers for Malaysians' aging population. So instead of focusing on just building daycare for toddlers, they're now seeking to look for opportunities, or already invested in opportunities for aging care within the Malaysian population. Secondly, is actually under the Gear Up program. They're really looking for companies, along with they're co-investing with the GLCs, right, on energy transition and technology, especially around semiconductor, renewable energy. They want to support companies throughout the entire life cycle, all the way from startup, midway through, and then putting money to work through venture capital, all the way until mid-tier companies before they even become listed. That's the second anchor around private equity. The third is that they are looking more and more outside, because I think in Malaysia there's a limitation to the addressable market, to the maturity of the capital markets here, and to the kind of companies that are sprucing up. Are there new entrepreneur ideas? I think they get them more outside rather than in Malaysia, and I think that they want to spend more time into private credit markets as well. That's interesting, because private credit markets, there's a demand. Obviously, there's headline news about risks within certain private credit markets, but by and large, because of the consolidation of banks, or my take of it is consolidation of banks, a lot of small and mid-tier companies are actually starved of credit, and they need it to scale for working capital purposes, for inventory, and I think that's where EPF notices this trend. And if these are the rates, and they can arbitrage on the rates being lent and their cost of capital, I think that's where they are trying to deliver returns as well in the private credit space. Last but not least, the strategic portfolio companies, they disclose, and I mean EPS reports are very, very transparent, which is like, again, kudos. They have disclosed a strategic investment department where the approach is really to become part owners of large companies to unlock sustainable returns. Now, the way I read it is almost like being an activist investor. The guys like maybe Carl Icahern or Pershing Square, Bill Ackman. They take a board seat, they take a minority stake, they do a board seat, they don't go in all in to do operational control, but they suggest, value unlocking strategies, value as asset unlocking strategies to actually, generate better returns from a company that may not be great at capital allocation. I see this similar to, the Tokyo Stock Exchange. I mean, if you watch the earlier video I made about capital shifting to Japan, which is on the right side, right? I think this is somewhat along the same veins, where they want to make capital allocation more efficient, especially in large corporations where they may be lazy capital sitting around. I think for me that's great, taking a more a more active approach rather than purely being a passive investor. So I think if I were to sum up what EPF is doing, I think they have been great stewards to the Malaysian Provident or Pension Fund. I think they've been very, very transparent, great corporate governance in sharing with the Malaysian public, who are all their members and all their LPs, for the lack of the limited partners. They are the GPs, right, running the show. How they do it, and is it sustainable? Is it something that we are aligned to? I'm, for one, very, very aligned to. I mean, as a small investor, we don't have access to private equity. I mean, great private equity deals. Most of the private equity deals that are already available to retail investors, most of the time they are not good deals. So, I mean, at their size, at their network, at the capital, I think they're given better deal flows, and I think they have been great stewards for us. So I look forward to them sharing even more, disclosing even more. Obviously, some of it may be confidential when they did the due diligence, but post the investment and them reporting back to EPF and EPF putting in the report, I look forward to seeing another stellar results in 2027, right? And while there have been withdrawals, there have been a lot of headline news and drama about how Malaysians are not saving enough. I think whatever that EPF has, and is still growing, right? I think EPF, if I'm not mistaken, is being replenished roughly about 11 billion a month, fund flow coming in, either voluntary or regulatory investments. And I think for them to handle a larger and larger size, they need partners. They need an ecosystem to be able to deliver, not just in Malaysia but overseas. And I look forward to them, being even better stewards for our capital. So let me know your thoughts, especially if you're an EPF contributor. What are your thoughts about them limiting the withdrawals? What are your thoughts about them having the flexible account, and what are your thoughts about how EPF is being governed? I'm looking forward to seeing your comments below, and if you can make it for the book launching ceremony on the 28th of March, 2 p.m., looking forward to seeing you in MPHDRX.